Good morning, traders, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, September 21st, post FOMC, and we certainly do have a lot to discuss today. It's good to be with you here this morning. Kelly's in the house, Pooja, Peter, Steve, Tom, Ziad, D. Great to see you all here. Carlos, great to see you in the room as well. I hope some of you caught some of those fireworks yesterday. We'll go over the implications on price action, obviously on the euro, dollar, yen, kiwi, gold. From last night's setup, we'll also cover the British pound, the Aussie, all the dollar crosses really, and we'll touch base real quick on what euro Aussies did. That's a real outsized move yesterday as well. But first, I just wanted to take a kind of moment and talk about the interest rate decision. We don't really go too deep into the fundies here, but it's just important to hear the implications kind of, I think, of what this broadly means. So if there's any pair that I didn't mention that you would like to review, as always, or if you have any questions whatsoever, feel free to drop them on the message board anytime. So the FOMC delivered. What can I say? The dot plot was the main thing that we talked about in the webinar yesterday. Let me just expand this for you. The main thing I just wanted to highlight here is essentially exactly what we discussed happened, right? We said if they held the dot plot still at expectation of 1.4, between a quarter and 1.5% for the close of the year, you'd probably see the dollar rally, right? Because although this was in June showing that expectations, markets heading into the release were still, very, very, very slight expectation for a December print. So that repricing in the market obviously will put some legs under the dollar. The caveat, okay, the longer running, and this is something else that we highlighted on FOMC, the longer running or terminal rate of interest rates, the median estimate has now dropped from 3%, somewhere around 3.5 to 3.75%, 2.75% rather. So that drop suggests that the broader slope of the interest rate curve is probably a little flatter than the market expects. So near term, you got to reprice that expectation for another hike this year. Longer term, interest rate glide path is likely to be flatter. So what does that mean from a price action standpoint? Again, suggests that near term, that repricing in the dollar could put some further legs under the greenback, which is what we've been looking for all week long, which is why those setups worked out pretty well yesterday. But I don't want to fall too in love with that directional play just yet, okay? Could see some further upside, but I do think eventually, remember, seasonalities and the broader trend still will take the dollar lower. So for now, we're still constructive, but I just wanted to highlight sort of the sensitivity that you're seeing in the dot plot. Other than that, Fed funds rate, again, yesterday popped up. When we took this snapshot, we were somewhere in the range of 75%, almost 76% expectation for an interest rate hike in December, which is what the Fed would need to do if their dot plot is, in fact, what they are, is their intent. If you look at this right now, I just took a quick update, a little bit softening here to 73%, but still, well above the threshold that markets are typically at when they do hike. The other thing that you want to pay attention to is the growth projections. We got those updates as well, and exactly, again, something we warned about in the morning. You saw that growth GDP forecast upgraded even further. We saw an upgrade last quarter and this quarter. And on the opposite side of the spectrum, core inflation, which was lowered last quarter, was further lowered for an expectation of 1.5%. Okay, so again, the broader end result or the broader glide path is starting to get a little bit lower, softening as far as the pace. But for the year, that third interest rate hike looks like it's still on the table. Even if you look at the Fed June projections and even from back in March, okay, they were at 1.4% for where interest rates would be into the close of 2017, and that remains still. So that would suggest we still need one more hike this year. Okay, I tweeted both these charts yesterday. I just wanted to kind of go over them real quick. Any questions on any of that hoopla? So again, kind of gave you a basic summary of what I'm looking at. Raising their growth forecast, lowering their inflation forecast, basically status quo, right? And you heard the entire press conference was essentially her repeating the phrase or rephrasing the notion that they don't remain committed to anything, right? although the offload of the balance sheet still does remain, or it looks like it's going to be a set in stone type of measured and unwavering pace. But even that, she alluded to the fact that if things really turn sour in the market, that they still would actually, or could conceivably go back to further asset purchases. So guys, nothing, the broader picture, all we did is just see a softening in the broader outlook for interest rates. But in the near term, the market still did need to reprice that last hike this year. Pooja says, hey, Mike, sorry I missed the first few minutes, just got back in. Was the market pricing any sort of balance sheet reduction, or was it a surprise? We heard them outline it last week. Yeah, no, I don't think it was necessarily a surprise. And even the pace was kind of outlined, or at the previous meeting, rather. So I don't think necessarily it was a surprise. I think that if anything, the projections and the dot plot that they're still expecting another hike this year. Again, remember, we went in with markets not pricing in any other hikes this year. So they're sticking by their story that they have one more left to squeeze out in December. I think that was the biggest move that you saw price in the dollar. As far as markets are concerned, yeah, I mean the fact that we have confirmation of the balance sheet offload, the fact that we of the exact date and timing. But again, you heard her say how stable and really, that she specifically noted that they were, very closely watching whether the markets are going to be able to absorb the added liquidity that they're going to be putting in as they offload. So I wouldn't want to say it was a surprise necessarily, Pooja, but sort of validation of what the market was thinking. So we'll see how this reacts in broader risk markets. I understand, obviously, people, if you just take a look at the SPX, you did see some volatility, right? But at the end of the day, you didn't really get that massive sell-off, right? I don't think there's necessarily a surprise in play here. At least that's not what the markets are saying. Okay. Again, any last questions here on the FOMC? Okay, story time's over. Let's jump into the real trades. Here's what euro dollar looked like last night. So we came into the week talking about, we kind of revised it a little bit. It was really, let me see what the first update here. If we go back, it was basically the 618, the retracement was the first initial resistance level that we were talking about, 1995, which is what we wanted to see hold as resistance. It kind of pushed higher. Okay, obviously FOMC time, you got to open up those stops. We talked about that yesterday. You leave yourself a little bit more of a cushion. Surged right through, pulled right back, and again, the result took out the weekly opening range low. The initial target that we had was 119.26, but the weekly opening range low is confirmed close below on the day, and that keeps the focus lower. So basically, you're still looking lower below this parallel, which leaves room for a little bit of a recovery. I wouldn't really be too concerned as long as we hold that with your initial downside support target still around that 118.26 level. Here's what euro looks like. We'll come back to the DXY in just a moment. One level that I just added this morning was kind of adding it, or just eyeing this out in my head. The 618 extension of the decline off the highs kind of gives you a little bit of a bump room here, 1876. Also, if you look at euro dollar on the daily chart, you know what I mean? It's kind of right there as well. So not too surprised. Could see a little bit of a bump up here, but I do think inevitably you look for a drop lower near that 118.26 level at the 618 retracement. And that coincides very nicely with the median line. Also keep in mind that if we do clear this level, and why I think you run into a little bit more of a problem here, is it's the objective monthly opening range low. Here's your September open, here's your September low. You made a high, you tested the low it held, you failed again to make a run at the high. Once you break down that below that level, that opens us up basically into the end of September of seeing further weakness, if that were the case. Now remember, like I said, don't want to fall in love with the dollar long for too long of a time period. I do think it's got some more upside to it, but inevitably we should be looking for these pullbacks to offer us some better entries on the other side. So near term, still looking for that drop into 1826. Initial resistance, 1926. Bearish invalidation basically would need to be a break back above the weekly open, i.e., this upper parallel. Here's the 120 looks like. Any questions on euro or where we stand on this one? So, okay, let's move on. And by the way, if you're on the swing side of things, your stop is still at 120.40. I think we put it out last night, or somewhere in that range, which would be basically just shy of the weekly opening, or just above the weekly opening range high. So I think that's a good spot if you're looking for a larger swing trade. Near term, guys, watch for a break below here to give you that run towards 1826. It's just an initial target. If this is just a correction, it would still take you down for an equal leg into 1780. Okay, I personally think you probably get down there. But first things first, this is sort of your key area of support to look for. All right, that is euro dollar number one. Let's just take a quick glance at the DXY. Still not so much telling because I want to show you the daily chart first. All this thing has done is set a pretty nice monthly opening range. Now it's the 21st of the month and we haven't cleared that range, so can't make any broader assumptions till we finally do, but here's monthly open resistance. Again, checked for a third time near term as resistance here from the start of the month. Obviously, we've been talking about the building divergence, and we've been looking for the rebound, probed a little bit lower than we would have liked. But again, markets don't work in a vacuum. Here's the push higher. On the intraday chart, I'm not a big advocate of this fork that you see here, but I just wanted to show you as a reference. I'm kind of working to see what price action does over the next couple of days to see if this makes any sense, this slope. But which is why I didn't put this chart last night, but it actually played out pretty nice on the pullback and it held as support. So I don't know if this is in play yet, but it does highlight the near-term resistance that we were talking about yesterday, 92.62 into 92.58. That little support or former support, now resistance zone. Topside break from here, you're looking for that 618 to 92.95. And the 2016 low day close is at 93.06. And we talked about the possibility, guys, of us getting up there, way early on. Again, take it really quick to the weekly charts and where the DXY is trading. You know what I mean? Leave room to the upside if this does end up being a little bit more of a significant bounce. Now up into the upper 93s, just ahead of 94, you start to run into that longer term slope, which has had some pretty nice touches here, and the median line for the broader downtrend. But I don't want to get put the horse before the carriage here, or put the carriage before the horse in whatever way it's said. You want to watch for that break for the upside if we clear 92.60. Okay. Questions on the index? Quick review there. Okay. Into more juicy, delightful things. Interestingly enough, the abomination actually did give us a pretty big outsized move yesterday too. Here's what dollar yen did. The daily chart, I'm not a big fan. I'm kind of default this one kind of to what Jamie's been looking at more so as far as the dollar yen is concerned. We did highlight one thing early in the week, and the one thing that was sort of a tell at the close or the onset of last week's rally was the fact that it made an objective break of the monthly opening range high. So coming into the start of this week, you're inherently just looking higher, especially with an opening range that breaks deeper in the month, like this 19th, the 18th is actually when we closed above. That would suggest you look for a late month high. Again, this is not what Mike Boutros thinks or just opinions. This is just based on historical price action, what we've studied in the past, that the extremes tend to come early and low and late in the month. So if the market's rallying, the low will be early in the month, the high will be late in the month, and vice versa. And the opening range break is typically a nice tell. So I'm looking for some sort of, the picture looks constructive. Let's just say that. It continues to look constructive, and you don't want to get too aggressive on trying to short this, until we kind of get towards the latter couple of days of the month. But on the near-term picture, here's what the immediate advance just looks like off of these lows. And this is the one I've been providing in the reports. Okay, so again, not the cleanest, but nonetheless, some decent pivots along the median lines, and they continue to converge on levels we would be looking at in any event, i.e., the 618 retracement was a nice resistance level that we held early in the week. Okay, and the convergence on the top side here, now you have the 764 retracement from the decline. The 786 actually comes in right here, but in any event, that 112.92 level is a decent pivot in price and has been for quite some time. So any way you slice it, near term, I would be cautious about trying to get any new long exposure for short-term trades up here. On a pullback, I would stay constructive while above 111.75. At the end of the day, last night, based on where we were in time, I was comfortable putting my bullish invalidation level here. Still kind of want to leave it there. Remember, we didn't quite fill the Sunday gap, so a necessity to, if we were, conceivably to break down from here, 110.80 would sort of be the end all result. If you break below there, you're probably seeing a larger reversal of the entire breakout. And keep in mind, that would also be an inherent break of the monthly opening range highs. So again, that would kind of reverse the signal that we got with last week's close. Long story short, look for probably a probe higher here. Again, if you're looking at long exposure, if you're holding long exposure, this is where I look to take some of that trade off. Stay constructive above 111.75. If we breach, and I can't say this enough, you're probably sick of hearing me say it, but I'm still going to say it again. The top side of an ascending median line formation, typically that could be the sharpest part. So top side pop above 112.90, basically 113, let's just call it. And there's room. This thing could go right into 113.57, 114.60 before the blink of an eye. So know your levels. Near term, watch the long side as you get into this region. You could get some kickback here from 113. Questions on dollar yen. BOJ didn't really do much. They still have a presser on tap, I think, at some point, but market doesn't seem to care, so neither do we. Dollar yen, dollar going once. Oh, by the way, just an interesting observation that I was making with one of my colleagues here, and I'm sure that Jamie has shown you this a million times, is just the overlay, guys, of what this has been doing with yields. I mean, just add, I don't know, just the 10-year. Okay, you could see pretty spot on. And typically we'll do this kind of analysis on a daily chart, but I just wanted to show you, even on an intraday type of price action, it seems to be that prices in the treasury markets are, point in fact, leading. The low was made a couple of hours before the low in dollar yen. The high was made basically at the same time. The low was made here earlier in dollar yen, but the high was made here previous to dollar yen. The high was made here previous to dollar yen. So even if you see this pull back a little bit, that would give us the opportunity to get back at support. And then again, we'd look to continuation on the top side break. All right, that is dollar yen. Some interesting stuff going on. Ooh, feel dirty just talking about it, but when the levels are there, the levels are there. Okay, Kiwi. Here's one that we've been watching as well. So we're on an open target still on the swing side of trades. So, I don't always keep in mind, guys, if you're holding positions on our swing side, they're two complete separate strategies. So I don't want you to be involved in any further kind of intraday types of moves if you're holding that position from the initial entry. But for those of you who aren't, or for the intraday guys who are with me, was a nice level, was definitely a nice level to reverse or get short off of. I even put this trade out on Daily FX yesterday. We talked about it in the webinar right ahead of the release. We also had GDP figures come out from New Zealand. So long story short of it was 73.89 into 74 was the region of resistance that we were looking for. Now, obviously, FOMC comes out, markets jackknife, and this is why, you want to be, you need to let your stops be a little bit wider out, lower your leverage on a trading environment such as the FOMC. I just want to take a moment and address a question. I got a question emailed me from a client asking me, specifically it was the sterling trade. And he was talking to me about how he got stopped out, even though we were looking at the same type of levels. We had everything mapped out, and then on the UK interest rate decision, he got literally stopped out to the pip, and then the market reversed. And he was asking me if he did anything wrong. No, sometimes the market's going to do that. And if you were into a position on the short side of Kiwi ahead of the release, it may have just spiked and taken you out before reversing lower. This is why heading into rate decisions or any type of major event risk, guys, just lower your leverage and kick your stops out a little bit. So that's one thing I just wanted to note as far as trying to trade these event risks. But it was a huge level, okay? And even if you look at this in a near term, 60-minute, you didn't really get a clear-cut close above that 74.02 level, which was just a basic pivot, if I'm not mistaken. I don't know if I have it on the daily chart. From the high that we made back here in November of 2016. So spike through, quick full pullback, momentum obviously got right back below that 70 level, and you're looking to play the pullback. So yesterday's update looked like this, okay, for Kiwi. Again, we were noting that long-term slope, that 618 retracement on the daily chart. The close needed to be up there. Obviously, the dramatic nature or the magnitude of the pullback is a tell in and of itself. And we had come off of just basic near-term channel resistance as well. So it's the confluence regions and my favorite zones: 100% extension off the low, 618 retracement off the high. Something's going to happen there 9 times out of 10. So there's the whiplash. Again, we look back at the 120-minute chart last night. We highlighted that 73.18 zone is just a basic trend line now, as well as a very, very basic 38.2 retracement. So here it is. I don't like this kind of break, and it's not really giving us too much conviction. And even on this near-term chart, you're seeing some divergence in price as we make a lower low, and the oscillator holds those lows. So you could see some kickback here. I mean, the target that I noted, guys, next was going to be the weekly open. That's 72.77, followed by 72.46. Both of these levels, I'd like to get back on the long side if we get back lower. If we don't reach these objectives and we turn higher, back above the weekly opening range high, then I would be looking to play resumption. You'd look for a pullback at that point to get back on the long side. But for now, I do think the immediate risk still is for a little bit of a sliver towards the weekly open. If that happens, one of these levels, I'll be looking for exhaustion, re-entries, and then the long side. Look, the long and short of it is you need to close above 74 to get this thing for a validated breakout. Okay, if that were to occur, again, there's next topside levels are 74.50, which is the high day close from last year. Also a decent pivot on the way up earlier. That's just a soft target, but really objective would be in that range of 74.80 to 75.15. I know it's a bigger range, but you have so much up there. You have the high day reversal close for the year. You have the 50% longer term retracement, the 1618 off the lows. There's a whole bunch of stuff up here and a major pivot in price. Even caught some highs back here in 2016. So levels are clear. Risk for a little bit more of a setback lower. Ultimately, if you're not already long, we'll see if we can't get a better position near that 72.80 region, basically the weekly open. Questions on Kiwi dollar? That is number 5. Okay, gold. Actually, that was number 4. Here's gold, number 5. Here's what gold looked like. Again, another really nice trade. I personally thought we were going to get a little bit of a bounce here to be able to get back in. Markets had something else in mind. So here we are heading to the next downside target, which we noted at the lower parallel. Right now, that comes in somewhere around 1287, 1288. So just watch that near-term support zone. Ultimately, the 50% retracement of the entire advance takes it down to 1281. It's pretty sharp. I wouldn't go chasing this if you're not already short. There's nothing to do here. Even as a near-term trader, if you're going to look to play some sort of rebound, we'd want to see a little bit more of a compelling, first of all, momentum profile to fit that kind of play, and second of all, just price action needs to react somewhere around that lower parallel. Otherwise, you just look for 1281 as your next downside. But wouldn't go chasing new lows here in gold just yet. The initial play, the initial inclination that we had for the week worked out perfectly. So again, here's what gold looked like last night. Talking about that support zone, you had its former swing high, real nice pivot, and the threat of a break to the downside would basically take you into that lower channel support, and then 50%. But earlier in the week when we looked at this thing, it was just coming into that long-standing July trendline support. That confluence with a low for last week was a basic break. And the fuel of that break, which would have been also a break of the monthly open, would have been just sort of a tell that you're kind of going to see this thing start to fall apart. Monthly opening range is given out. You're looking lower in gold for a late month low. Okay, so pretty decent play, again, as expected here on the downside, especially in light of the dollar strength that we were looking for. The magnitude of it and the speed, I'll grant you, is a little bit faster than I expected, but I'm not going to go chasing it short from here. We probably should have sat in it a little bit longer once it hit 12.99, but that was support. So if you got out, we kind of still need to wait for a re-entry here. Questions on gold? It's funny because I've been hearing all kinds of explanations on why gold is doing what it's doing, and it's almost comical at this point. Price action has been pretty clear, though. Okay, so sterling. Mr. British Pound is number 6 on today's session. Here's what sterling's doing. It's still in the weekly opening range. So, quick review on what we've been looking at with the pound so far this week. Here's what it'll look like back on the 19th, just ahead of the FOMC. The main sort of play and the main thing that we've been talking about is the Brexit gap and the wanting for us to stay long, looking for us to fill the Brexit gap. And the invalidation level was pretty close. Okay, the invalidation level for the immediate upside was 34.45. As long as we stayed about that level, we wanted to see if we can get that stretch into Brexit. It happened real quick, guys. So unless you had a limit somewhere just ahead of the actual Brexit gap, you might have not gotten filled on that. Now, that being said, the slam lower took you right into the weekly opening range, and then that held a support. So what I'm trying to say is not a pair I'm interested in playing even on the dollar rebound as far as the short side. Rather, I'd be looking for, as ideal of a long position on a tight type of stop I can get. And this would be the one that I want to play specifically once we see the resumption of the broader downtrend in the dollar. But as it stands right now, you're at the weekly lows and you're at near-term support. Former channel resistance, the break saw acceleration on the pullback. That's where you'd expect to see some support. It's exactly where we bottomed yesterday before we rebounded, and we've been holding a tight range ever since. So the weekly opening range is set. Look for that to draw direction, guys. If it does break lower, okay, fine. This thing's probably going to correct a little bit lower. I wouldn't really, like I said, I wouldn't want to be looking to play the short. I'd want to see if that short can offer me a nice opportunity to get long a little bit lower from where we are right now. If the pair just blasts through the Brexit open, unlike the scenario from here, but if it does, again, don't chase. But on such a scenario, you'd look for a rebound back into that same level to get on the long side for resumption into 138. It sounds kind of crazy, but not at all. Not for pound. Here's what it looks like on the daily. No change to any of the levels that we've been following. Oh, Pooja, I missed your question there. I'm sorry. What would be your ultimate buy level on gold maybe next month? I mean, look, it depends how big the decline gets. You know how I trade, Pooja, but I respect your question. So if again, if you were to put a gun to my head and say, where would you look for sort of the ideal entry? It would probably be right there at like 1240. I don't want to see this thing fall apart beyond that. Guys, I'm of the mindset that there's still plenty of upside here longer term because we've broken a multi-year slope off the record all-time high in gold prices. Okay, and even the parallel of that, which was perfect resistance all last year, even that broke. The momentum profile changed into the lows, so there's a lot to look at here to suggest you're still in a broader uptrend. So ideally, in a fairy tale world or what's the word? What's that fairy tale story with the Goldilocks zone? We'll call it. Is 1240. It's 1240. I mean, if the thing continued collapses lower, based on what I'm seeing on the weekly charts, that would be a level of which, if we were to reach, I would be very interested in establishing a much longer term long position. If you look at this in the weekly, though, there's a couple of things on the near term that could give you trouble ahead of that, i.e. the 100-day moving average, which has been a nice pivot in price. That could just be a nice support ahead of that region, or even the basic 618 retracement of the advance off the July low. So the idea, this is what I can say, Pooja. I would have a better idea on an answer for that. Sorry about that. I would have a better idea on the answer for that once we get structure to the decline. So right now, as it stands right now, I mean, again, based on kick that on time, where we are, we're at support. So you could see a rebound right here. 1281 is where would be a decent pivot in price, and again, structural support. So that's how I play it. It's got to be level by level. I don't know if it's going to get down to 1240, and at the end of the day, the broader uptrend is in play. So I wouldn't want to get too overzealous on looking for the pullback to get that deep. Does that help, Pooja? So let's just say this. Near term, I'd like to stay constructive above 1280. But on a larger drawback here, if the dollar does really find some legs, 1240 is my bullish invalidation level, let's call it. I.e. ultimate buy level, as you would say. Pooja says, yes, perfect. All right. Cheers on that. Okay, so moving right along. Sorry, just to go back to pound, guys. I just missed her question. So is there any questions on the pound? Again, not interested in the downside per se, but if we do get a larger drawback, I'd be looking for a reentry at lower levels. You have a pretty clear weekly opening range. It's filled the gap, so if it does break this gap range, look for continuation higher. And again, that takes you basically to 38, 38.40. Okay, that is British pound. Next up on tap, number 7 is Aussie dollar. And here's what Aussie looks like. Also had a decent play yesterday, continues to break down. From a formation standpoint, not the cleanest with that thing that we did earlier in the week. And then this was a break of the weekly opening range high. And then this was a reversal break and a push below the weekly opening range low. So this thing's been all over the place. The only thing I liked about it was the level that we had discussed here early in the webinar. It turned out to be more or less resistance. That was 80.81 into 80.90 essentially. We capped out just higher at 81.02. So look, if this parallel that we added yesterday is in play, it still highlights the median line right down here at 764 retracement, and that still gives you room for it. For a move lower into this little pocket area where channel support converges on all that stuff. What can I say on Aussie? Again, another one with which, if you're not already in, I don't necessarily see a position here that we can jump into already. If you are already in, it's the 618. I'd do something. Take something off the table, bring your stops in, look for the extension push into 78.82. That would be the next level of which I would expect to see a little bit more of a stringent hold on support. But Aussie was one that we had highlighted. Ahead of FOMC too. And here's what it looked like right ahead of the FOMC. So we were testing that channel resistance. Remember, I was holding a short against the weekly high. This thing broke through, took me out of that short, stopped me out, rallied right into this zone, sweet spot, overshot, reversed, And again, now we're breaking below the weekly opening range low. So the target at 78.80 is still the level we're looking for. Okay, questions on Aussie? Okay. The other one I just wanted to review real quick because we did highlight it earlier in the week was Euroaz. Pretty big outsized move. I didn't get involved in this, but the setup levels were kind of just like ping pong on this thing. Here's what Euro Aussie looked like early in the week. We talked about testing the underbelly of that trendline resistance and to see if that would hold for a play to the downside against that region. Intraday charts had a lower slope here off the highs, which seemed to converge on even a near-term advance, draw even deeper. The 120-minute chart looked like it was seeing some exhaustion just below 70. Yeah, a whole lot to look at, and it was all suggesting, even if it was a correction, two equal legs up, you probably want to watch out for a short pull back off that region. Well, boy, did we get one, and it was pretty ferocious. Here's what Euroaz looks like. So I don't think I need to really talk about this one too much. We talked about this during the webinar. It was breaking below the lower parallel, looked lower. We highlighted this, bigger zone between 147.95. I think we noted down to 147.70. It literally probed right below that and then just ripped face. Look where we're at resistance again. 50.26, 50.36. That same zone of resistance. Now, this outsized move here would be considered constructive. The fact that it's happening near the highs concerns me as being possibly an exhaustion trade where it's just a cascade of everyone trying to get out. So look, at the end of the day, this was the break of the monthly opening range low. This outside day reversal has covered the entire monthly range essentially, just pips off the high. So that kind of price action also tells you something. And the notion of this would broadly be constructive. So a different type of take, and certainly if the Aussie pullback has more legs, it might outpace Euro losses, which would drive this higher. I just wouldn't get too overzealous with it, okay? Because if you're gonna be wrong on this, you're gonna be wrong big, and if you're gonna be right, it's probably gonna be a nice healthy profit. But at the same time, you've just covered the monthly range in one single day. So typically when I see something like that, I want to see that range cleared, and boy, oh boy, the break of that range should definitely offer you a couple of days of decent directional bias. Till we do, you're at the range high for the month. Okay, any questions on Euroaz? Okay, so a little bit more of a neutral stance on the immediate approach. Largely speaking, we're kind of just waiting to see the confirmation break of the upside to get this thing going, I think. All right, that's everything that I had on my menu, guys. I want to leave it open for you. Do you guys have any questions on any trade setups or pairs? Oddly enough, I was watching Bitcoin and Ethereum very closely yesterday. Just on account of the dollar movements that we were seeing, I wanted to see if that would hit the crypto block. It didn't really, which is very, very interesting. So, they still continue to do their own thing, both consolidating just above a break of resistance. And again, the broader upside still remains a viable play in both of those currencies. I do think if you get a decent pullback, the levels that we discussed earlier in the week remain the same. So you look for 1265, 1270, 265, 270 for a near-term support if this breaks lower, but the upside target still remains that 313 level here in Ethereum. And on Bitcoin, sort of a similar type of picture again. You're looking for this consolidation break just above, which continue to move along that parallel. Kind of drop this down. Whoops. Kind of drop this down to this zone to see that move towards 42.23 again. Um, why is this all out of order? I missed some questions. I'm sorry, guys. I wasn't sorting the questions by time. Here we go. Pooja, Euro Kiwi at resistance. Is there a short? Ooh, yo, yeah. Damn it. I tried to talk about this with you guys yesterday, and I completely forgot. The one thing I want to show you with Euro Yen is the weekly chart. I think it's clear on the weekly chart for some reason. I'm not really seeing that crazy resistance just yet on the daily, but here's what I'm looking at in the weekly, Pooja. And Raphael, remind me, was that you who sent me the email with regards to a little confusion on the swing trades? If it was, I'd like to adjust that here. It might be a little bit easier, but the intern did forward me that. So let me know if that was you. But Euro Yen Puja, here's. Let me take a step back. The level I'm looking for is 134.90 would be sweet. Now look, I was really looking at this chart. I was thinking about putting out a piece on daily effects on just really broader weekly charts again, but I didn't really know how to portray this. Look, if we take the actual low in price, we just hit the 618 retracement of the entire 2014 decline. If we were not to take the Brexit low into account, and typically for me, I'm not a big fan of using those emotional lows because specifically there wasn't a lot of trade or price action transactions that took place there. Also, the low on different days, depending on the event, specifically on this massive outsized day, would be registered on different platforms at different levels. So if you take into account, my long story short is you'll always hear me say that if there's a real big emotional market move, I like to use another low. And here's the 618 off this. That converges on the upper parallel basically next week and this week around 134.90. Okay, so it gives us a little more room if we were to take, okay, Puja, this interpretation, not using the low. Like I said, the low would actually put the 618 at where we are right now. So, we could do something like this and then kind of highlight this whole zone. Still would leave you a little bit more room for that pop higher into the upper parallel. Near term, we've been following this pitchfork, Puja, for a while. If it's a topside break of the upsending formation, what do you want to see? You want to see acceleration. We're not. Point in fact, you're seeing some divergence here. Price action making a higher high as the oscillator made a lower high. Now that's on the longer scope. You really would want to be looking at these 2 points, but in any event, it's not a very healthy momentum profile as it runs into resistance at 70. So it could be a little bit of a peaker just to throw over above resistance before a pullback. I don't know. I don't really want to get too involved in this right now, to be honest with you, because I think the yen weakness probably has more to go, but so does euro. So you're basically trying to bet on who's the biggest loser here near term. Intraday, here's what it looks like, Puja, even if we break it down further. So the weekly opening range and the fact that yesterday's FOMC rate decision gave us no definitive price action also is a concern. It means that the upside is seeing a little bit of a wane here. You continue to see the momentum profile making lower highs. Okay, much higher high. And the weekly opening range is preserved. Here's your Monday, Tuesday stretch. We've been sitting in that range ever since. So there's not too much anything compelling on the near term. Puja to make me do anything just yet on Euro Yen. Oh, you're talking about Euro Kiwi as well. Let me take a look at that. And I saw Rafa, your question on Pound Yen, so we'll go over that in a moment as well. So that's Euro Yen. Kiwi Yen, or Euro Kiwi, Puja. I'm sorry. Here's Euro Kiwi. You got me all excited about Euro Yen because I saw your Euro Kiwi and a Pound Yen question. So I guess it's late in the week and I'm mashing together my numbers. But here's Euro Ki. Yes, you are in your term. You are in your term median line resistance. Let me clean this up for you. Just give me a moment. Yeah, wouldn't want to fight it just yet. Wouldn't want to fight it just yet. Where's Kiwi? I like the idea, Pooja. Um, Obviously, I mean, to be quite frank with you, I haven't really been following this pair in a couple of days, but I like the idea. Yeah. I mean, here's what I would say. I would like to stay focused to the downside below the weekly open. Now, the weekly open comes in just above a basic 38.2 of the advance. So look at the US Open. Even if we were to spike into that level, I kind of want to see if we could fade it. Now, the only concern that I have is that daily chart and the fact that you dipped below, those former yearly opening range highs, even the median line, and then now you're seeing an outsized recovery. If we were to close today above that, you'd kind of think there's a little bit more bounce on the upside before the resumption. So watch 163.50 into 58. Basically, the weekly open comes in at 57.7 for resistance, or I'd like to stay bearish below that. Let's say. Again, ultimately, the hesitation that you're hearing in my voice is because this was a target. So I don't know if that just completed it, and we're gonna, we should be looking for a little bit more of a dramatic recovery here if the Kiwi turns lower from here, um, or if we're gonna finally make a drop into that zone we were actually looking for, which is just a tad lower. That's kind of my issue. Just like pound, I mean the Brexit gap on the IFC data feed is just a little bit higher. Kind of missed about like 8 pips, I think. So do you kind of still look for it, or is that it? 63.15 monthly pivot as well. Oh, where we got off of right here? Monthly? Yeah, monthly pivots are tending to be pretty big levels as well. And if you take my cursor and look to the left there, obviously into the close of August trade, you saw some support once we broke above it on a pullback, right? Boom, boom. Yeah, and you're at median line resistance. Again, all things held constant, I would be looking for resistance here. The only thing is the magnitude of the advance. You want to always look at how price action is actually pressing. If it was kind of a bounce and then we saw some pullback and then we saw a draw higher into this, I'd love it. But this kind of V action, get a little bit concerned about getting too aggressive. On a short side scalp on a near term, yeah, let me get deeper in price. Yeah, I mean, you're still getting sort of, well, there was a divergent signal back here, but it's still a grind higher. Look for 64.40. Getting spike into that might be a decent sort of near-term play. And if you get real tight price action, this might offer some guidance as well. You know what I mean? And if we were to do something like that, and again, this is getting into like 10-minute, 15-minute charts, guys, which is typically what I do when I try to get for entries. That would still highlight if we press higher into the US Open, 63.40. Again, if we downside break here, cool. Might be a decent pullback there. And a good way to participate in your weakness if you don't have it already. Yeah. Wait, 63.15. Yeah, it's exactly where I would have it, above the 50. Yeah, I like that. Hope that helps, Pooja. Interesting pair. I didn't really pay attention to this one yesterday. Obviously, all the dollar crosses got all the highlights, but looks interesting. We'll continue to follow this one. Again, guys, feel free to take a snapshot of this chart if you need it for later use. Okay. Raphael, great to see you in the room. Again, I was going to get to your email today, but I just want to address that right now. There are probably other people in the room who have questions. So any issues with if you're trying to follow the swing trade, guys, it's very simple in that, each day the swing trade is published after the close of U.S. markets, and each day the pending trades are the orders, okay? You put these orders in, you just let them go. If the markets reach the level, then you're in. If the markets don't, then if the next update doesn't have that same order in there, then that order is canceled. Okay, they're basically good for 1 day. If Jamie or I still like to trade, we'll leave it on there. But if we don't, then after that day is done or after that U.S. trade session closes, you cancel those orders. So just reference this, after the close of each U.S. trade session, and you'll know exactly what the entry limit and stop should be on each position. The watch list obviously is just that. And then when we have an active trade, there'll be that active section telling you what trades we're currently in. As far as Twitter, Raphael will only put changes on Twitter for altering this. So if we want to bring in our stop, or if we want to bring in our limit, or if we want to get out at break even, those types of any type of change that you'll see to these will be on SB Squawk. And those will be accompanied by hashtag trade. So anything on SB Squawk that comes out with a hashtag trade on it, you can set an alert, by the way, if you'd like. So you get a message anytime that we tweet something with that. That'll be an alteration to either a setup that we have or a trade that we're currently in. Okay, Raphael, I'd highly encourage you to go through Jamie's how-to tutorial. Okay, it's right here on the website. If you go to long-term charts, just go through that, and he kind of walks you through the swing trades, how that's formatted, and how to follow along day by day. And Rafa, one thing you didn't note in your email, also make sure to follow Jamie's personal feed as well. I know you're following me and SB Squawk. Does that help, Raf, before I get into pound yen for you? I will go through tutorials again. Got it. Thanks. Very useful. Hey, cheers, man. I just wanted to clear it up. I'm sure other people might have questions on that as well. He's asking what Jamie's Twitter handle is. It's at jsatelli, if I'm not mistaken. But you can find it right here at James Satelli. There it is. Just sent it through the chat box. All right. Okay. So moving right along. What was it you want to talk about? Pound yen. Here's pound yen. So this is the weekly chart. And I just, it's kind of something that popped into my head yesterday because the rally seemed to really rip. And obviously on the daily charts, we were looking at that long-term trend line off of mid-2015, which kind of came in, kind of dabbled with a break earlier. And certainly the top side break, basically wanted to take a little bit more of a longer-term objective view, a basic 38.2 retracement of the entire decline from 2015. Basically puts you at resistance at 152. 151.95 to be exact. Obviously, we probed just through that this week, but near term, we're going to have to see how the market closes the week. If the market closes the week below this, yeah, I do think you maybe get a little bit of a kickback to open next week, but largely speaking, there is tons of room in this trade for the upside, in my humble opinion. You're just at near-term upslope resistance. So that's the weekly chart for consideration. Watch 152 further highlights that near-term zone. If we look at the daily chart, where art thou, pound yen? There's the Widowmaker. Oh, that's not the daily chart, it's the intraday. There we go. If you look at the daily chart, aside from that 152, 151.95, 97 barrier that we highlighted on the weekly, here's the daily chart shows basic trendline support, parallel extending off the low there. Take a parallel of that slope off the high that we made for the year previous to the breakout. Basically puts us at resistance again right here at 152. So I don't want to take any new fresh long pound yen exposure from these levels. Again, you'd want to look for some sort of pullback before you were to take that position. I don't even want to be cute and try to play the pullback because, again, this is a straight breakout. There's your 2015 trend line. Again, the daily chart looks much cleaner. Straight breakout, plain and simple. You don't want to get too cute. And momentum is in overbought territory. And as long as the overbought territory, condition persists, the market has the propensity to push higher. So if we break below 70, then you'd look for a little bit larger of a correction to the downside. We haven't seen that yet. In my mind, again, if you put a gunshot to my head, I do think you kind of get a pullback a little bit lower from here before you head higher. but that's just my personal opinion. Right now, you're at uptrend resistance. So you look for pullback to get back in, or if you're holding longs, you do take something off the table here, book some profits, bring your stops up, and see if you can't get that topside break. Here's what it looks like on the intraday. So despite the pound ripperoo that you're seeing, right, some of that, or that you saw into the highs, obviously pound dollar price action still kind of holding the weekly opening range as we noted. This thing, it's kind of just creeping into resistance, so I wouldn't want to play it alongside. And even on these entire week, you've been marking divergence in the momentum signature as well. Lower low, lower high, lower high, lower high, and obviously a series of higher highs. So you keep having these retracements and keep stretching into the highs. You never want to do this, but I always like just to be prepared. So if the drop happens suddenly, I already have it in view. But even that kind of scenario, doesn't even put a 50% until 145.70 or so. So there's no play for me here. There's no play for me here. If we were to get, by the way, let me take that back. If we were to get a play back below the weekly opening range low and a break here, that might be a decent short exposure just to the median line for real near-term guys. But all things held constant, I'd look for the pullback to get long again. Rafa, does that help on pound yen? He says too early to enter long. I think it's too late to enter long. I think that's what you meant. At this point, you need to wait for a little bit more of a pullback before you can start to think about a fresh long position from here. Rafa says, got it. All right. Okay, any other questions, guys? Before we wrap things up for the final webinar of the week, it has been a big week for markets. So let the dust settle here a little bit. If you're flat on the market, I wouldn't, doesn't necessarily get too excited about fresh move from here. Near term, guys, there are going to be some further opportunities as we get some pullbacks on some of this, the trades that we've already seen and the runs that we've already seen the dollar crosses. But I'm probably going to keep it light here heading into the end of the week after such an event risk. All right, guys, we're going to wrap things up here. I want to wish you all a great weekend. I will see you on Monday again for the free session on Daily FX, and then we'll go ahead and be back here on SB Tuesday and Wednesday and Thursday of next week. Till then, best of luck trading. Have a great weekend. Cheers.